Good morning, good afternoon, good evening, and welcome to the Wednesday, the 14th of December, Bull versus Bear webinar. Steve Miley on the call here for TradeDay.com. Welcome, everyone. We'll go through our usual regular run through in here today, calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires. What are the macroeconomic fundamental events that are impacting markets right here, right now? We will then also go on to take a look at the charts. What's interesting? Okay, so first of all, calendar, what we've had, what we've got coming up. CPI. Okay, first of all, let's talk about CPI from the US from yesterday. Obviously, beating expectations. So if I go and click in here for yesterday's activity, we can see in here CPI activity below, even though it's in red because obviously they're looking at this is a negative, but it's actually a positive when it misses at the moment with CPI inflation rates so high. So core number below on both the month and year on year, 6.1 versus 6 versus expected is 6.1, 0.2 versus 0.3, 0.1 on the headline number, 0.1 versus 0.3 on the month, 7.1 versus 7.3. So all of these numbers better than anticipated. Obviously, we saw the market shoot higher yesterday and then actually give up some of those gains. Okay, so and a significant amount of those gains. Nevertheless, for me, the extent of the gains, the positive numbers, and the underlying short to intermediate term bullish theme we had anyway across not only equity indices but riskier assets in general, says to me that the tone from a technical basis going into the day remains positive, remains bullish, despite the significant intraday setback, which obviously made trading very difficult. I did see an interesting article in here. Where is it regarding the 60? Look at this. So I don't know if you guys noticed this, but I wasn't actually online watching as the data broke, but stocks and bonds jumped just ahead of the key inflation data. YSS is unaware of any early release, so the market leapt a minute before. So who knows? 13,000 March 10-year futures traded hands when usually nothing is going through in that minute before. So whether it was just a trade put on, who knows, right? Who knows? Maybe they'll look into that and see what went on. I mean, they can obviously quite easily look into it. They said there was no leak. So anyway, that did happen yesterday, the minute before. But nevertheless, the market shot higher and then the early jump made it very hard to trade. Yeah, exactly, Clinton. So the market did jump, which just makes things trivial. Then obviously it continued initially with the better than expected data, and then we saw an intraday turnaround, which made it obviously quite tough to trade. So anyhow, that was yesterday. If we go and take a look at then going into today, obviously, before we get to it, we've had UK data as well, UK inflation data this morning. Again, that beat expectations. Okay, so you can see in here, came in at the year-on-year number, 6.3 versus forecast at 6.5, the month-on-month 0.3 versus forecast of 0.5. Okay, on the core and on the headline number, month-on-month 0.4 versus 0.6, 10.9 versus 10.7 versus 10.9. So the numbers in here across the board beating expectations for the UK CPI as well. Clearly going into today, the main focus is going to be on Fed. Okay, very much anticipation of a 50 basis point hike. The CME tool in here tells us now it's now nudged back up to nearly 80%. After the CPI data, more chance now of an 80%. Interestingly in here, if we go out now to the peak in rates in May and June, remember, this has been oscillating in between the peak either being 475, 500, which is 100 up from here, to 500, 525. Well, now if we go to May, we're at the very, very strong chance of 475, 500 as a peak. in May versus 500, 525. And then we go to June, still a much bigger. These, remember, much closer. The 475, 500 and the 500, 525 peaks, have been fairly close. And at times this is the actually 500, 525 has been higher. So the market, and if we go out to July, we'll still see 475, by far the leader in here. And if anything, if you look at the peak in here, there's more chance of the peak being at 450, 475 now. If we look there at June and July, this column is taller, right? This is bigger than this column over here now, through May as well. So the chances of, not so much in here, but the chances now are increasing that the peak is only going to be 475, 500. Now, given that we get 50 today, that means another 50 at the beginning of next year. And then, so the peak is lower. And then, if anything, a risk of the peak not being as high. And then as we go towards the end of the year, you'll see then here we're at 450, 475 by September, and by November, definitely 450, 475. So looking for a rate cut somewhere in there, September, November meeting, okay, for next year. So even the rate cut potentially being brought forward now. So there, the anticipation of maybe an earlier rate cut because of that inflation data beating expectations. Something else I wanted to focus on here, is Powell's. So Powell's most important US inflation indicator calls again services prices, less energy, services, rents rose 0.1. Fed chair says categories key to understanding core inflation. So a slice of the consumer price index, the Federal Reserve Chairman Jerome Powell flagged recently as potentially most important for determining the outlook, moderated again in November. So services price excluding energy, services and rents rose 0.1% last month, and 0.4% in October, and 0.8% in September. So this is what Powell has told us previously that he thinks is important, okay? And this number continuing to slide, okay? So you can see a big drop in here on that core US services inflation, okay? So it's the services prices, less energy and rents, okay? So that has continued to fall, and he tells us that that's what he thinks is important, okay? So that's significant as well, okay? Whether it's just Powell, whether it's the whole of the Fed, but nevertheless, that's something the Fed certainly look at. So this continues to drop significantly. As I say, it was only 0.1, plus 0.1, having been 0.408 and 0.8 the previous 2 months respectively. So that's significant as well, okay? And that continues to fall. So the market now pretty much pricing in a 50 basis point hike for today, and looking for, potentially for the indications for this peak to moderate, okay, to be a more moderate peak going into the summer. Now, clearly it's going to be critical on the language in the statement. Clearly it's going to be critical then on the Q&A. If you remember, at the last couple of meetings, there's been a slightly different tone from Powell in the Q&A in the press conference 30 minutes later than in the statement, okay? So we've certainly got to watch out for that as well, okay? So we can get a move in both directions. Don't think it's done and dusted once we get the data out and once we get the release out and the statement out, because the Q&A is sometimes giving us a little bit more clarity. So we're certainly looking for where that peaking rate, is pretty much nailed on. We're going to have the 50, right? If they go 75, the market's going to tank, right? Definitely is going to tank. So, but given that it goes 50, and then the market will drill into that statement very, very quickly. The algos will be looking at that statement. Are they looking for are they seeing inflation moderating? Are they going to be potentially less aggressive? But Powell will not want to signal this as a dovish pivot, okay? He does not want the market thinking that, okay, we're nearly done, and then we're going to peak very soon next year in hikes, and then we're going to be cutting rates, right? That is not the message they're trying to send. The message they've been trying to send is, once we get to this peak, wherever it is, whether it's 475, 500, 500, 525, wherever that peak is, we're going to be holding there. That's the message they've been sending us. The market's not pricing that. The market doesn't believe that. The market believes that recessionary pressures coming through next year are going to force the Fed to be cutting rates into Q3, Q4, more likely into Q4 next year, okay, in a year's time. So we're certainly looking for any, and he's not going to want to signal that they're having any kind of dovish pivot and that there are rate cuts coming in 10, 12 months or something like that. So but if there is any implication of that, right, then obviously then the market's going to love that, as in the stock markets will love that, any kind of dovish pivot coming from Powell. So it's going to be all about the Fed today. We've had and then as I said, we've got Bank of England and the ECB tomorrow, so that could have a knock-on effect. So US futures rise before Fed's final hurrah of 2022. So overnight we've got a slight bid to the market in here. Futures, it says futures flat in here. They're slightly up. If we go and jump to the where we are right now, so we had the markets only ended up moderately higher, but we're slightly up in here this morning, about 1/10 to 2/10 higher on the overnight. Having not really added too much yesterday in the end because of the whipsaw price action, the initial leap pre the data, then the continuation post data, and then the sell off through the session. What else do I have in here for you? So that's about that's Powell's focusing on that. Oil, if you're trading oil, steady overnight in here. It's rallied back with risk assets. Risk assets have rallied over the last two sessions, with oil having hit a new low for the year. At the end of last week and beginning of this week, we have seen a rebound in oil, and we're looking for that rebound potentially to continue, but we'll take a look at that shortly on the charts. What else do we have in here? I'm just going to share this. I haven't gone through this yet. Hopefully this is open to everyone. So this is a little piece of an editorial in here. The 50 people who define global business in 2022, the Bloomberg 50. I haven't managed to go through it yet. It's just something that could be quite interesting. So there you go, in case you want to take a look at that. I haven't gone through that yet, but it's something I will be going through. There's the thing about the leap. So UK inflation, we've already covered that, falls from 41-year high. Bank of England, as I say, tomorrow, and the ECB. Overnight in here, European bourses, European exchanges are slightly lower in here this morning, between 2 and 2/10, 1/4% and 0.5% pretty much across the major indices. Okay, let's have a quick look at 5 things to start your day from Bloomberg. So in here we have it's Fed Day. No surprises there. We kind of covered that to death. FTX in here, still in the press. Sam Bankman-Fried been arrested. We kind of looked at that yesterday. World has a new richest person, according to the Billionaires Index. Bernard Arnault, French tycoon, LVMH, Louis Vuitton, displaced Musk because of Musk's fortunes getting worse because of the fall in the price of Tesla. Stock stall. So we had the rally and then the setback yesterday, and then markets a little changed overnight in here. So all eyes on the Fed. Just to wind back though, if you are trading oil, don't forget you've got your usual oil inventory data coming up at 10:30 Eastern today. Crude oil inventory data, but all eyes really on the Fed for this afternoon. 2:00 on the Fed decision, 2:30 on the press conference is going to be critical. It's unlikely to do too much ahead of there. If anything, I've got a slightly positive outlook. So let's go take a look at the charts in here. Start off on the S&P. Remember, now I've been stressing this. I hope you're all still with me. Remember the roll, guys. Yeah. I would certainly suggest by now you're trading on the March contract. Certainly by tomorrow at the latest. Some of you may be still in the deck, but on the S&P and the Nasdaq in here, the equity indices, Dow, if you trade the Dow, you certainly should be watching for should be trading on the March contract now. Okay, don't get caught out with illiquid markets as we move into off the debt contracts into the March contract. There is still liquidity in the debt contracts, but I would certainly not suggest trading those. Most of the liquidity very much now in the March contracts. So in here, the market obviously had this huge shoot up now. If you as a strict technical analyst, this is a really negative candlestick, right? This is called a shooting star. Shooting star usually in an uptrend. Well, the market is in a bigger uptrend, but you're not at the top of the uptrend in here. You actually you just swung from a downtrend. So Usually that shooting star, you want it like up here on, at the very top. Like this is a little shooting star we had here, right? A mini shooting star here, and the market did sort of set back and consolidated. The qualification on the shooting star, however, is the market needs to qualify and confirm the shooting star with a move below the low of the shooting star pattern. So that would be below yesterday's low, which is here at 4,017.5. Okay, so only through there confirms the shooting star. So what you've actually seen is the market is holding in here, and is actually, if anything, we've had a slight bounce whilst above 4,017.5, 4017.5. I would hang on to a more positive outlook in here. And if we switch to the March contract, if we switch to the intraday contract, so there's the massive spike higher, so the market did obviously spike ahead of the data but then you did get a continuation after the spike. Yeah. So if I actually step right the way into like 5 minutes, so there was that spike 5 minutes before, but then you got the continuation. So there was a significant, but that obviously, as I do, feel for the fact that, you'd already had this push higher. Do you jump on it when you get the data? So obviously made it very difficult, Clinton, but there was a significant push even higher. The market then quickly reloads and then comes back higher again, very, very choppy through the data. And that leak, or I'm not saying it's a leak, but something happened, right? Whatever happened, whether it was just a massive order went through the bond market, who knows? And that then took stocks higher as well, whether it went through the stocks, I don't know. We don't know yet, the market. I've not seen anything on that. So, and then obviously you then gradually retrace all through the session. It's difficult. Do you buy the dip in here, or are you going short in here? So, we're all really, really, really tricky trading scenario after that initial move yesterday, I would say. But whilst above that low there, so the low is over here, 4017.5. It's the overnight low. Whilst above that low, I would say, if it gets through this low in here, the subsequent low, even though the actual daily low is over here from the overnight, the pre-data, I think back down through there would be very negative. That's at 26.25. But the market's obviously holding above. It's in a holding pattern. It's probably going to stay in a holding pattern. I don't expect it to break out below, here, 40.45 or above the peak there at 40.72-ish and change. I think it's going to be confined to this area, even into the Fed, right? The cash market open may give us an impetus either way. I'm still running into this with a more bullish feel. But, I think you trade a breakout through that peak, through for like 40.72 or probably down through 40.45, just through that breakout, the overnight breakout levels in here, I would say. You failed multiple times around here. Look, here, 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 and then we just failed again. So this kind of area here is all very interesting. I'd say from 40.66 up to like 40.70. That 40.65.70 area is really important on the top side. On the downside, it's probably either the recent lows here from 40.45 down to about here, down to like 40.40, 40.45, 40.40 on the downside. In between there, it's just noise. And yeah, I wouldn't be getting involved. I think I wouldn't be playing this until the Fed. Okay, so I think you just have to wait until the Fed and play it then. Let's have a quick look at NASDAQ, and it's similar story, potential shooting star pattern, but underlying still a higher high and a higher low. If we step into the 15-minute chart, rather than looking at the pre-overnight low, I think this low is obviously important here. Down through there, it gets very negative. That's 11,847. But again, it's probably noise between, they've got multiple failure peaks around here. Just above 12,000, 12.10 up to like 12.15. If it gets down below, 11.9, I'd say 11.900, 11.880, then it all looks more negative. In between there, it's just noise, so no strong view. Okay, and again, I think it's just playing the breakout. What else do we have in here? Let's take a look. I'll just run through some of the other markets. So obviously bonds shot higher. We go and look on the bonds shot higher again pre-data. Okay, so maybe something was out. Maybe it was through the bond market. Bonds look like they were motoring actually even before. If I go to the 5-minute on the bonds in here, what time was the bonds market started going? So actually started going at 120, then 125, and then obviously it continues. Bonds more robust though, didn't give up as much. Yeah, if you think about, what we just looked at, we pretty much gave up most of the gains. We're back down here. For there's the data release or pre-data release. And then equities are back down in this kind of zone, right? If you look at where we are, we're kind of held onto half the gains. However, more recently, the market has been tracking lower. We have broken down through this low in here. I think bonds look a little bit more positive. I'd still be playing this from the long side, but again, all about the Fed. Upside breakout points probably up through, these, you got various peaks around in this area here from like 131. So this is a 10-year note, by the way. I think that's right, ZBH. No, ZBH is 30-year, right? Yeah. Actually, Lee, you trade this, right? ZBH is a 30-year, right? So in here, above here, I think 131.08 up to like 131.11, I think is important. You've already taken out the support in here. You nudge down below that. So probably next support's down like this area here, 130.18 on the downside. Let's take a quick look at gold and oil. So gold more positive than what we're seeing on the stocks. Didn't give up as much. Have had a little dip on the overnight. Did make a new high. If you look at this important high over here, took out this high here as well. Just actually, did we take it out? I think we just nudged above it. I saw we just got above that high there. Is 1836.7. Peak in here is 1836.9. Yeah, we just got above there. So it took out that peak there. That makes this a far more secure basing pattern. So for me, gold is probably a better buy in here than we see on the better buy than on stocks. Yeah, so it's got a better breakout and it's held on. But again, drifting lower, just taking out the support here this morning. So again, it's a little bit of a tricky one. Again, though, all on the Fed. Let's take a look at oil. Building on this rally, pushing back higher. So we did hit new lows for the year at the end of last week. Rebounding from there, the beginning of this week, a decent day yesterday. Took out resistance. See these peaks here? These failure peaks. I'll zoom in and see those. And we're kind of using those old resistances as support now. So if I zoom in to 15-minute on oil, we've got these failure peaks here. And you can see the market kind of now just dipped below those breakout peaks and there's rebounding again. So oil and gold both looking healthier from a technical standpoint than the stock indices. All right, guys. So mark long oil. Yeah, I think oil is a better long in here. I'm not convinced on the short mark on the S&P, but I think you have to wait on that one. But oil is a better setup from a technical perspective, anyway. All right, guys, I'm going to wrap it up there. It's going to be a tricky one, so be careful out there. Stay safe. I'll be back for you with another bull versus bear webinar tomorrow to see what we get from the Fed. Until then, take care. Have a good one. Have a great trading day.